Why your payslip changes each month. Explain simply. If your take-home pay looks slightly different from last month and you are not sure why, you are not alone, and it is usually nothing to worry about. Even on a fixed salary, your payslip is unlikely to look identical every single month. Understanding why it changes helps you spot when something is genuinely wrong. The most common reason your payslip changes is how income tax is calculated in the UK. Tax is worked out cumulatively across the tax year. Your employer looks at everything you have earned so far and adjusts each month's deduction to keep the running total accurate. If slightly too much or too little was taken before, it gets corrected automatically. Any change to your actual earnings will change your payslip. This includes overtime, a bonus, a pay rise, or a reduction in hours. All of these affect your gross pay, which in turn affects your income tax and national insurance for that month. If HMRC issues a new tax code during the year, your employer must apply it from the next pay period. This can change your monthly tax deduction noticeably, particularly if the new code corrects an error or reflects a change in your circumstances. Changes to your pension contribution rate, the start or end of a salary sacrifice arrangement, or adjustments to other voluntary deductions can also change your net pay from month to month, even if your salary stays the same. Here is an example. If you received a bonus in month 3, your gross pay was higher, so more tax was taken. In month 4, with no bonus, your cumulative tax calculation adjusts, and your deduction may be slightly lower as the system rebalances. Your take-home pay evens out over time. This is useful when your take-home pay is slightly different from last month, for no obvious reason. When you have received a bonus or overtime and want to understand the tax impact, or when a new tax code has been applied and your deductions have changed. A common mistake is assuming that any change to take-home pay means something has gone wrong. Most of the time it has not. The cumulative tax system means small adjustments are built in by design. But always check your payslip, look at your tax code and gross pay, and understand what has changed and why. To recap, your payslip can change each month due to cumulative tax adjustments, changes to your earnings, a new tax code, or updates to your pension. Most changes are normal, but always check if something looks unusual. Thank you for watching. Subscribe for more everyday money explained simply.